some of the Asian markets, they distribute through tied agents.
Yep.
So one thing that was interesting is it's more of a side hustle in terms of they will work directly with the insurance company. But in Australia, UK and the US, it's much more kind of, professional financial advisors who do it full time and we feel like we're more important.
Yeah. Well, again, it comes back to the cultural aspects. In the countries where we have this tied agent model, I think customers there really value long-term relationships with people. So these agents would be essentially friends or family of the customers, and these are markets where they place more value on what the opinion of their friend or family member is, rather than going to a professional whom they don't know or whom they don't trust. Insurance already is viewed as a very dodgy scheme by many people.
Yeah.
So if a friend has recommended something, they would rather go with that. So that's why these tied agent models are quite successful in such markets.
Yeah, it is interesting to think about, like, why, like, Australia, we value the opinion of our friends pretty highly, but I'm probably not going to get $1 million life insurance policy because my mate told me that, Tau's good or, Zurich's good. Hey there, Phil Thompson, and today for another deep dive, we have our newest professional year advisor, Neha. Thanks for joining me.
Thank you, Phil. Thanks for having me here.
Congratulations, you're three days into your professional year.
That's right.
Very exciting. And here for a deep dive episode. So one of the things about these deep dive episodes is our team get to choose. That's the best thing about these deep dives. Our team get to choose what they want to talk about and do a deep dive on. So Neha, talk to me about what are we talking about today and why did you choose it?
Yeah, so today we'll be exploring how culture has impacted life insurance products in different markets. So how it has impacted the product design. And the reason I chose this is because I have previously worked for an insurance company in Kenya. And when I moved to Australia, I saw that there were a few differences in the insurance market here, which was pretty interesting. And the other day we had a talk in the office about what the origins of insurance is. When did it actually start? None of us knew, and how it started. So I thought it would be interesting to explore that a little more, how it started, and then the nuances across different markets.
Yeah, and the other thing, I was talking to one of the other team and we were talking about underwriting in different countries, and I asked the question to head of underwriting at one of the insurance companies who has a parent company in Japan. And I said, how do you manage these kind of underwriting questions in Japan? And the underwriter said, well, to be honest, they don't have the products that we do in Australia, so they don't need to underwrite the same way because of the different product design. So it's a good topic. So we're going to be talking a lot about different countries' products. So let's start off. What is the origins of insurance?
Yeah, so fun fact, insurance, I think, reportedly dates back to 1750 BC. So it started with traders and them trying to manage their risk while they were transporting goods, shipping goods across the world. And life insurance dates back to 600 BC in China. And it started through groups called benevolent societies. So these were essentially members coming together as a group, contributing money either monthly or yearly, whatever the frequency was. And the aim of that was to help, in case one of their members passed away, it was just to help their family members cover for funeral expenses. So that's how it essentially started. Now, through lots of mathematical models, statistical tools, insurance has evolved. Modern insurance, as we know it, has changed. And they've evolved differently across different markets in the world.
But I mean, at its core, this is what I like to think about. At its core, insurance is about a group of people coming together, putting money into a bucket, and then when someone needs the money, they pull it out of the bucket. Yeah. And yes, there are for-profit businesses who manage the money and then invest that money to mean that there's less money needing to get put in premiums. Yeah. But yeah, at its core, it's just a community service that we all contribute to. Yeah. And so... yeah, it's interesting. 1600 BC was the first one. Yeah. So now talk to me about what are the main types of policies and covers worldwide?
Yeah, so before we even get into the comparison, I could briefly explain what the main buckets of insurance products are. So firstly, we have term insurance, and that's essentially a lump sum payout to the policyholder in case they pass away within a given time period. So it could be 10 years, 20 years, or up until the age of 65. Then we have whole life insurance. Now, this is a bit different than term insurance because it covers you for your entire lifetime. So whether you pass away in 10 years or in 40 years, it doesn't matter. You're covered throughout the whole of that. We have total and permanent disability insurance, TPD, which is quite common in Australia. I won't get into too much detail because I know you have lots of videos around these topics already. And critical illness or trauma insurance here, which pays you a lump sum in case you're diagnosed with a severe illness. So these are the main buckets of those insurances.
Yeah. And income protection, which we have in Australia, is just not very common worldwide.
It's not, that's right.
Yeah.
That was one of the first things that I noticed here when I moved here, yeah.
Yeah. So, all right, well, yeah, let's touch on like what do we have here in Australia? Why are we unique? Why are we all special butterflies here in Australia?
So I felt that Australia's insurance market is a little complex. It was hard for me to wrap my head around when I was studying financial planning, let alone a customer who's not familiar with insurance at all. So most people here in Australia get their insurance through superannuation, which we call group insurance or group cover. And we have retail cover as well, which is typically sold through financial advisors. The things that make Australia stand out, a few things. I mentioned whole life insurance earlier. So the reason we don't have whole life insurance in Australia is because of the introduction of superannuation. So the government introduced superannuation in the early 90s, I believe, and this was a way to incentivize people to invest and save for their retirement and therefore not rely so much on insurance as a wealth building tool. So we don't have whole life cover here in Australia, but we do have the term insurance, term life.
Yeah, and that's the other thing that we didn't touch on too much about. In other countries, they have like investment linked. You pay your insurance premiums, and it has an insurance portion, but it also has like a investment link. So if you cancel the policy, you get the investment return. So it's big in the US. If anyone's watches TikToks from US based finfluencers, and they come to us and say, how do I save tax with my life insurance policy and use it as an investment vehicle? We go, we don't have that. You're watching too many US videos. And so I was in the US last week. Yeah, it was last week. And talking to the advisors there and asking questions about the product and how it all works, and they were just like, what? How do you? Like, you only have term life insurance? Like, you only have like just the actual insurance portion, and if someone cancels, that their money they don't get anything back. And so those investment linked products, they used to be in Australia, but they haven't been here ever since I've been an advisor, so a long time.
Yeah, so here your investments are kept separate from your insurance, and insurance is exactly that, just simply a risk protection tool.
Yeah, and it's priced accordingly. That's the other thing. People think, I'm getting ripped off if I cancel my policy after 20 years and I don't get anything. Well, you've paid significantly less because there's no investment, portion of the money. So that obviously has to be priced in as well.
Yeah. And these investment-linked products are also pretty common in Africa and India as well. And one thing that people have started to realize, given that we have so much access to information now and financial literacy is really growing around the world, you will come to realize that these hybrid policies, if you look at it as an investment, it's not that great of an investment. And if you look at it as an insurance product, again, it's not that great of an insurance product. So overall, I have mixed feelings about those.
Yeah, you may as well invest in investment products and have your insurance with insurers.
Exactly.
Yeah, exactly. All right, so let's go do a bit of a deep dive into different markets. So we've got you've done research into kind of 4 main markets, and they would probably be the biggest markets outside of Australia, so US, Japan, UK, and South Africa. So let's talk about kind of the differences between those markets.
Yeah, so the UK has a very well-developed insurance industry already. They focus primarily on the term life insurance and critical illness. So that's another thing that I noticed with Australia as well. We have trauma cover here, which is quite unique. We have a really good big focus on trauma cover. In the UK, they call it critical illness. And one key difference between the UK and here is that they don't offer TPD, or the total and permanent disability, while here we do have that.
In the UK, like, how are these products distributed? Like, how are people buying these products?
So in the UK, largely, they have a good network of independent financial advisors who would recommend these products, in contrast to other markets like Africa or Asia, where they have what we call tied agents. So these are agents for particular insurance companies that can only recommend products from those insurers.
Yeah. Which is similar to Australia. So we legally can't call ourselves independent because we get paid a commission, and there's funny rules in the Corps Act that says we can't call ourselves independent, but we are third party. So, whether we choose TAL, AIA, MLC or Sender or whichever insurer, we're getting paid a commission from those insurers, but it's the same percentage. So we are, at Skye, a third party to the insurer, so we can recommend anyone in the market, similar to the UK market.
Yeah.
Yeah. So let's talk about what country are we going to next? Where are we flying to next?
We can fly over to Japan.
All right,
You
let's go.
touched on Japan. And so one thing that I found very interesting was reportedly, well, this is according to the Financial Times, nearly 90% of all Japanese households have some form of life insurance. And culture is a big part of this. So in Japan, there's a strong social obligation that people have. They feel that they need to take care of their families, not just in life, but in death as well. So a lot of people there in their younger years, they tend to get term life insurance just so that they have that peace of mind that their families will be protected later on. Funeral cover is also a big one. They want to make sure that in case they pass away, their family would be able to pay for their funeral, which is not so much the case in some Asian markets like in India. We don't really have that focus on funeral cover in India.
Yeah, and it is interesting. And 90% of households having life insurance, I think it's just over 30% in Australia, and we're lucky because we've got this superannuation system that shoves insurance onto everyone. So it's crazy how high their take-up rate is. And it's also interesting because some of the biggest insurance companies in the world are from Japan, and obviously that makes a lot of sense, given the amount of people who have insurance there.
Yeah, another aspect that has shaped the popularity of some products in Japan is their longevity. So Japan is known for having one of the oldest populations in the world. People survive well into their 90s. Or maybe even up to 100.
Yeah.
So they have products called annuities or retirement plans.
Yeah.
So essentially, the way we have term insurance product to protect you for death, they have these annuities to protect them for the longevity risk that they have, the risk of outliving your savings or outliving your retirement fund. So that was pretty interesting.
We have that in Australia. It's not as popular, the annuity market, and annuities is kind of this, actually, side note, it's an interesting kind of product. It's a life insurance product. You have to have a life insurance license to offer an annuity product, even though it's like 100% investment related. But yeah, an annuity is you pay $500,000 into this and you guarantee to get 40 grand a year every single year until you die. If you outlive the length of the investment returns, then you win.
Yeah.
If you die early, then you lose, and so those products, they are like technically under the Life Insurance Act, but they are investment only products, and it is interesting that the life insurance portion, it's important for people in Japan to get, but knowing that they're going to live longer, they convert, they use these annuity products as well to make sure they're not outliving their savings.
Yeah. Also, just the cultural aspects I found very interesting. It's more like a moral obligation for you to have insurance there.
And in Australia, we've got a moral obligation to say she'll be right. That's how we think about it. It's I'm sure I'll be fine. I'm sure my family will be fine. I'm healthy. I'm young. I'm this. I'm that. She'll be right. Yeah. So it is very different. Cultural aspects of it.
Yeah.
Anything else in Japan, or are we flying off somewhere
we can
else?
go to South Africa now.
Never been to South Africa?
Yeah.
Have you been to South Africa?
I have not,
Okay.
but I hear it's a great place to visit. So in South Africa, funeral cover is extremely popular there. So culturally, funerals are quite extravagant, and it's a matter of family honor, the way funerals are held there, how big they are, how they're conducted. So funeral cover has been a big product there, and it's interesting to see that insurance companies have found solutions for funeral cover specifically to be able to reach segments of the market which these people wouldn't otherwise afford insurance. So very low income earners, and even the way these products are distributed to these segments are very interesting. So I think you had some interesting things about how it's distributed in South Africa.
Do I? I'm not too sure. Help remind me what interesting fact I had.
Yeah, through like they're selling these insurance products through their supermarkets, through smaller savings communities that they have there.
Yeah. I think Discovery. Like I went into a session with AIA, who have Vitality, which they stole from Discovery. Didn't steal. They partnered, with Discovery, and they were talking about in South Africa. Literally, you go to a certain supermarket chain, and they have this insurance company branding all over the place, like literally in the aisles, in the checkout aisles, on the floor. It talks about Discovery Vitality, and so they're all talking about this wellness product, and it's like, most people in South Africa, and they will know who Discovery is and the Vitality program there, and it's so well known. When in Australia, you talked about the biggest insurance company in Australia, which is Tao. I would say probably 1 out of every 10 people you talk to would know the brand Tao, and they advertise they do have an advertising campaign, but it's a different market in South Africa. They know the insurance companies. There's a lot of take up as well. Did you have any stats about the take up of cover in South Africa? Because it is big in South Africa as well.
Yeah, I did have something here. So the top 10 insurance penetration in 2020. So top 10 countries. So South Africa is up there, pretty much number 3. The uptake in insurance is quite big there. Australia, I don't see Australia in the top 10 though.
No, it wouldn't be.
Yeah.
we don't like insurance.
Yeah, we have a really low penetration rate of insurance here. So Hong Kong is at the top, Taiwan, the UK, Singapore, Japan, of course.
Yeah, it's interesting. This stat that you've got is also talks about the life and non-life products. So some, like the USA, have a huge non-life portion, which would have been the investment-linked type of policies.
That's right.
That are distributed under life insurance companies. But places like Hong Kong is much higher percentage of the actual just straight life products. So yeah, where are we going next? What have we missed? Have we missed a country? US.
We might have. So US, we've already touched on the US, how they're focused on more of these investment-linked policies. And the reason could be, well, I'm just contrasting this with Australia. Superannuation is a very big wealth-building tool here in Australia. And that's why you wouldn't find insurance products focusing on investments here. But unlike in the US, they do have their 401k, so they do contribute a portion of their income into retirement savings. But I'm not sure how big the uptake is there.
I don't know as a percentage. I asked one of my US financial advisor friends that I've just met last week how it all works, and it's not very simple. We in Australia we've got superannuation. It's literally just straight superannuation accumulation. When you get old and you take the money out, it moves into pension phase, fairly simple, and then the defined benefits, which is much more complex, but almost phased out completely these days. In the US, they've got like 401ks, and they've got like a Roth 401ks and something else. And one, you get a tax deduction when you put the money in, but it's taxable when you take the money out. The other one is not taxed. You don't get a deduction on the way in, but it's taxable on the way out. And I was just like, man, this is complex. And I think that some companies will match. I think they match 3%. If you put 3%, they'll match the 3%, and that's it. Yeah. When in Australia we get 12%, as part of our normal salary. 401k is a complex. I didn't understand.
Yeah, perhaps that's the reason they find these hybrid insurance products a bit easier to understand, and maybe that's why customers would prefer that.
Yeah, I think so. Yeah, maybe. I think the other thing, we haven't flown to New Zealand, but let me touch on New Zealand, because I met a lot of New Zealand friends, and we've done I've done a bit of due diligence in New Zealand. One thing, very similar products over there. One thing that they do have that's a little bit different to Australia is their life insurance companies sell health insurance as well. In Australia, our health insurance companies are health insurance companies, and our life insurance companies are life insurance companies. And some of them will do both, but it's pretty rare that a company will do both. But in New Zealand, they almost all do both. I was talking to a few people from insurance companies in New Zealand, and they were saying that the health insurance part of their business loses so much money. Like, they're just like, any insurance company that's launching there that doesn't do health is like so much better off, because that's the money loss over there is the health insurance portion. All right, let's move on. Let's talk about, we touched a little bit on distribution in terms of like how are people getting these products, but I think just recapping, some of the Asian markets, they distribute through tied agents.
Yep.
So one thing that was interesting is it's more of a side hustle in terms of they will work directly with the insurance company, and it will kind of be a side hustle. So, think, something like Tupperware. My mum did Tupperware when I was a kid, and that was kind of a side hustle that mum did, and Thermomix. So things like that's very popular in the Asian market, that style of distribution. But in Australia, UK, and the US, it's much more kind of, professional financial advisors who do it full time, and we feel like we're more important.
Yeah. Well, again, it comes back to the cultural aspects. In the countries where we have this tied agent model, I think customers there really value long-term relationships with people. So these agents would be essentially friends or family of the customers, and these are markets where they place more value on what the opinion of their friend or family member is, rather than going to a professional whom they don't know or whom they don't trust. Insurance already is viewed as a very dodgy scheme by many people. Yeah. So if a friend has recommended something, they would rather go with that. So that's why these tied agent models are quite successful in such markets.
Yeah, it is interesting to think about, like, why, like, Australia, we value the opinion of our friends pretty highly, but I'm probably not going to get $1 million life insurance policy because my mate told me that, Tau's good, or, Zurich's good. Yeah. We do value, professional advice. And, that's our business. Fortunately, it works for us because we build a whole business out of it. But, it is interesting, this dynamic of, and I wonder if it's because in Australia we've got more complex products as well. Like, it isn't just something that your friend knows about this product, because funeral insurance is relatively straightforward. You pay X amount, you get X amount, if you pass away. Yep. But things like income protection, it is much more complex. I wonder if the distribution model influences the product design, or if the product design influences the distribution model. I don't know the answer, but I'm questioning
it could be both. Regulations also come into play. Here it's a very tightly regulated industry. We have all those complex rules and tax obligations. And so what works for your friend might not work for you yourself. And when you try to start understanding all of this, wrapping your head around all of this, then you find out that, you don't know as much as you thought you did. So you now need to go to a professional. Yeah, perhaps that's why we value professional services a lot more.
And that's also true, thinking about, like, the Thermomixes or the Tupperware. You didn't need a 3-year degree plus a year professional year and all, and then 40, 50 grand per advisor in just straight costs for regulatory costs. But in Australia you do. So it has to be kind of, more professionalised because of the barriers to entry. Yeah. But in other markets where the regulations aren't as tight, the barriers to entry is easier. So therefore it's easier to trust a friend to, they say this insurer's good, and so you go ahead with it. Yeah. I wonder if that's also... All right, let's talk about trends and innovations. So we touched a little bit on discovery, vitality, but let's touch on what are other markets around the world thinking about when it comes to insurance.
I mean, with the vitality, I could just expand on that a little bit. So this is wellness-linked insurance. So the way you approach your health and wellness will impact how your premiums are charged on your policies. So it even comes down to the level of what groceries you're purchasing. So there's a lot of tech that comes into play. We have a lot of applications. People are wearing smartwatches these days, which are tracking all of your health metrics. They're tracking all of your shopping, grocery shopping. So, I mean, if it comes to be that you're making healthier decisions or healthier choices in your day-to-day life, that impacts your premiums as well, and how, what features are available to you in your insurances. So I think that's pretty interesting, and it's picking up in many markets. So I think this started in South Africa with Discovery Life and Vitality, like you mentioned, and it's now here in Australia as well.
Yeah, it's been here for like 11 years, I think, 10 years. I went to a session last year, I think it was, or 2 years ago. It's been here for 10 years. In Australia, it's a little bit different in terms of it's not linked to your shopping, and all of that. Like they don't track, AIA will send me an email if we make it sound like they're tracking our shopping. They don't do that, but they engage, if you engage in healthy activities like, you have a fitness tracker and you're doing X amount of steps per day, then you get points. If you get a certain amount of points over the year, then they set you at they're actually changing the system. We'll talk about changing it, but they set the premium discount today. And if you engage in the program, then you keep that discount where it is. If you're not engaging, you're not, having health and wellness and, all of these things, then your premiums slightly go up and the discount reduces. And then, if after 5 years there's no discount on the policy, and then you re-engage in having healthier activities, then you can keep getting the discounts again in the future. So it is interesting because at the end of the day, the insurance provider, they want people to be healthy as long as possible, because then they're paying less claims. So if they're going to offer discounts, that's kind of a great innovation, and the way, and Discovery put out stats, I don't know the stats off the top of my head, but like how it has really impacted the people who engage in Vitality have a significantly lower claims rates than the ones that don't engage. Yeah. Are there any other innovations that's going on around the world?
Other than that, not much.
You mentioned
it's more in the space of micro insurance, but that's again a different type of insurance than life.
Talk about that. What is that?
So basically, small levels of cover. We talked about funeral cover. So these are small amounts of sums insured that are available to you, and such kinds of covers are sold through all sorts of ways. So through your bank, through your supermarket as well, through mobile networks, through the smaller savings communities in South Africa. So that's where all of these micro insurances would be sold. And I know in Kenya, there's a company that does agricultural insurance. And again, that's sold through various different ways, not your typical financial advisor or going directly to the company. Yeah, that type of stuff's interesting. In Australia, there is companies that are trying to move in this space, like very like tech startups. They get really excited that there's a huge opportunity to insure people. And I read an article yesterday from the biggest insurer in Australia is partnering with someone doing these kind of micro insurance policies. And I think their idea was, how do we offer sickness, accident and illness cover for like casuals, or if someone's doing like casual work for a set period of time, then they can set up a policy for that set period of time, and it's easy to get the cover, and then it finishes after 3 months or whatever. So there is a little bit of innovation in Australia, and how does it look? I think the regulation's so hard to get to that point. Like the requirements on any company to innovate and make changes is really hard in Australia. And I think the appetite is also something like income protection. We just want to set it up. Do I really want to, set it up and turn it off every 3 months and then do it again? In Australia, we just prefer to kind of set and forget. We either ignore it for 5 years, which a lot of people do, and then set it up. And then once it's set up, it's like, all right, I'm all good. So it'd be interesting to see if these micro insurance kind of products, if they do pick up in Australia. Yeah, it'd be interesting to see. All right. So, is there anything else that we kind of haven't touched on yet that you think is kind of important to communicate to people watching? Well, related to the topic today, I just thought it was an interesting topic because it turns out culture touches on everything, even insurance, which I didn't expect it to be have that much of an impact on how our products are designed in this industry. So it affects everything: how people buy their policies, what kind of features they're looking for, And it all comes down, it ties back to society and different markets, different cultures, that kind of thing. And I came to learn that Australia has a pretty nuanced, life insurance market. It has some pretty unique things here that are not common in other countries. I've come to learn that, our blend of retail and group insurance combined through super and the emphasis that we have here on income protection, trauma, it's unusual and quite advanced in many ways. We do have our challenges. You have touched on the challenges in previous videos also. And I think that there could be things to learn from different markets, and it would be interesting to just see how we evolve even further.
And I think it's interesting you talk about culture. Like, I think, we talked about regulation and we're in a very highly regulated. I mean, to be honest, going to the MDRT where there's, I think they represent 85 countries or something in the group. I think we're one of the highest regulated industries, around the world when it comes to insurance advice. And you talk about culture impacting that. I wonder if it is a very Australian cultural thing to go, hey, we want the government to make sure that we are protected. So set up these boundaries and guardrails for us to make sure we're not getting scammed, or if there is something going wrong, we want recourse against that. And what it's meant is high regulation, what we have in Australia. And is that's only come about because of Australian culture. What we deem to be, the right way of doing it is not a nanny state. I don't subscribe to Australia being a nanny state, but we want protections. If I'm buying something and it doesn't work, I want consumer protections to be able to take it back and get my money back. And so that's kind of the culture that is different around the world. There is less consumer protections around the world, which is good in lots of ways and bad in lots of ways. And I think, as you mentioned, it does come back to culture and what we deem as Australians as to being, the right way of doing it. Whether we've landed in the right space or not, I've got my own opinions on that. But this has been a really good chat. I love learning about different, insurance products around the world. And, as I said, I spoke to one of the insurers who is owned by a Japanese company and talking about underwriting over there. And it's really fascinating to see kind of where we've landed at. And I agree with your point that, our insurance products in Australia are very, very good. We pay out huge amounts of cover. We just would like to see more penetration, but the quality of the product also reflects on the cost of the product. It's expensive cover because of it.
Yeah, I think in income protection cover here in Australia, when I came to learn about it, I thought this is great. More people should have this. But I understand that in countries in places like Africa or some Asian countries as well, societally or culturally, they rely a lot on their friends and family. So in case they lose their income for a period of time, there'll be someone to take care of them. And that's why there hasn't been that much of an uptake of this product there, unlike here.
We just tell each other to get stuffed. don't interrupt my life. Insure yourself or I might donate to your GoFundMe program, but leave me alone. All right. Thank you, Neha. I really appreciate you doing all this research, and I think this has been a great deep dive.
It was interesting for me as well. Thank you.
Awesome. Thanks.